All right, guys, we are here for another reaction video. This is very popular in our subscriber community. We always post about what kind of things you want to see done. I get messages from people on Instagram and Twitter saying we need more reaction videos. So we do them. I have not seen this video. I don't know what the title is. I tend to not watch videos, by the way, but they've set this up for me. There's a white screen here, but now we're going to react. I don't know. Tim says I shouldn't get too mad at this one, but we'll see. So what is the video? Peter Lynch, there you go. Sucker's going up. It's not a good reason. Well, of course. All right, so let's watch what Peter Lynch, one of the best investors of all time, ran Magellan Fund.
We are now joined by a very special guest. Can we call him a legend? I think we're going to. He is a legend. Legendary investor Peter Lynch. He is with us from Boston this morning to share his perspective on the economy, markets, and the work he's doing for the Catholic Schools Foundation. Peter, of course, is the vice chairman of Fidelity Management and Research and advisory board member of Fidelity Funds from 1970.
Now, I want everybody to notice something. Look at this growth. Yeah. Well, I can't hit this thing right. Look at this growth right here. You know what Peter Lynch says? He goes, listen, I did 28% a year, but my average investor made like less than 10% because people were buying it at the wrong time and they were selling at the wrong time. That's just like ARK Investments. ARK Investments, even over the last 5 years, but the average investor in ARK is down like 30 or 40%. Why? Because when the excitement happens, they start pumping money in there. That's usually when the euphoria is way too high. But let's continue on.
1977 to 1990, he managed the Magellan Fund, growing it from, you ready for this, $20 million to $14 billion in 1990 at the time of his retirement. Buy what you know is what Peter taught us, and it's so
the most
nice to
overused
see
statement in investing.
Good to be here.
Besides, it's different this
So
time.
let's talk about buy what you know. I'm so curious these days how you're thinking about the economy.
Well, I think people that are investing in individual stocks, it's sad they're careful when they buy a refrigerator or an airplane flight.
What do I say? What do I say? I want to pay full price for cars. I'm sick of people bragging about how much money they saved, $1,000 they saved on researching their car. But when it comes to a stock, they buy whatever stock for whatever price because it's a cool company. That's exactly it. Thank you very much, Mr. Lynch. He says refrigerator. He's right, though. People spend hours researching a refrigerator to save $14 and find the best one. Comes to a stock, he's like, well, the company's a really good company, so it's going to be the future. Let's keep going.
They're careful with their money, and they'll hear about a stock on the bus, and they'll put $5,000 or $10,000 on it. They have no idea what they do. So
a friend of mine was once playing basketball at my house. A mutual friend of ours mentioned a company. He literally on the spot spent $20,000 buying the company, and it went down 40% on him. And we know both those people.
That's awesome.
Yeah.
You're really got to be careful. Look at the company. Look at the balance sheet. What is the reason the stock should be higher? The sucker's going up is not a good reason.
Is your sense, though, that the style of investing that you pioneered is still
he's got an Oura ring
and winnable today?
Well, I think looking for something different, looking for something that's a good story. I mean, who would have guessed TJX, a local company,
TJ Maxx,
would have gone
love
up
it.
50-fold, or Stop and Shop would go up 10-fold, or Analog Devices, or NVIDIA. I couldn't pronounce NVIDIA. So you have to find a company that's either a turnaround or a company that's going to grow, like Panera or, Family Dollar stores. I'm not saying they're buys now, but that's what's made our, Sears is rolled over, so Kmart's rolled over, IBM slowed down, but we've had new companies come along. I mean, that's the nature. You have to be looking for new companies and look at the balance sheet. If you can add 5 and 5 and get reasonably close to 10, you should be able to look at a balance sheet and say, here's two depressed companies that gone from 50 to 3. One company's got $3 million in cash and no debt. One's got $3 million in debt, no cash. Which one are you going to buy? I mean, that's not too hard to do.
Peter, I watched you closely because I was in the business back then, and I don't know. Do you remember how many S&Ls went from mutuals to stock trade that you made just buku bucks on back then? I mean, I don't know if you missed any of those, and they were all big winners. They're all big winners. They were all big winners back then. What do you think of the financial sector right now and what happened? We saw with First Republic, and I'd just like to get your insight there since you were so good at that sector.
We had a terrible financial crisis in 1991. I think almost every major bank in Texas went under. Bank of New England, one of the oldest banks in the country, went under. It's like, in 08, 09, the banks were doing these no-doc loans and second mortgages and home improvement loans, and people are buying boats with it. Now the banks are getting much more careful. So we've gone through other crises some banks will go under.
That's a great interview.
400 went under after 08, 09. Now we have stress tests. I think the banking system has improved. There'll be some companies go under. That's the nature of it.
That is the nature of it.
Imagine 1980, 81, we had double-digit inflation, double-digit unemployment, and people worried the Japanese were going to take over the world. I mean, we were hopeless.
Go ahead.
What does that sound like, Mo?
Yeah, what you're saying about China.
Yeah, it's like everybody says that China's going to take over the world. And by the way, I think China's much more likely to be the #1 economy in the world than Japan is, because Japan still had a wealthier country back then. They had, China's still in the early stages of it. And guess how much it makes me lose sleep?
None.
0.
It's so funny. I just noticed something. When you listen to people like this, you listen to Buffett, Munger, Greenblatt, they're not using big words. They're just using very basic common sense. And this is probably why the average person out there goes, yeah, they don't get it. Because they're not trying to sound smart and trying to use all these big terms and
years
numbers.
ago, there was an insurance salesman who now is a wealth manager in town. And he used the word depreciation when trying to sell me an insurance policy. I just looked at him and said, what the does depreciation have to do with insurance policies? And he shut the up. We left, and our mutual friend looked at him and said, you cannot come in not knowing your shit. But look at him. Literally, if you can add 5 and 5 together and get reasonably close to 10, you can value a company.
Very basic.
He's trying to be funny. 5 and 5 is 10. If you can get anywhere close to that, if you can get 9 or 11, how do you miss 5 plus 5? The whole point is anybody can read a balance sheet. Anybody can learn financial statements. That's why we have this. That's why we have this channel. But all these other idiots out there, the Tom Nashes, the other financial idiots out there, actually, you know what? One person can't add 5 and 5. Stock Mo can't add 5 and 5.
Maybe his cat can.
Yeah, maybe his cat can. All these idiots out there who have no idea, they try to complicate things by trying to sound smart. I don't want to sound smart. I am smart. I know that. But the thing about me that's smart is I try to keep it simple. Keep it simple, stupid.
That's the way to go.
If I look at a business the way I look at a person, I look at their assets, their liabilities. If you're a person who makes $10 million a year, you have $100 million in the bank, and you have 0 debt, that's a lot different situation than if you make $1 million a year. If you make $100,000 a year, you have $1 million in debt and $500,000 in assets. That's simple. Now, are there intricacies involved? Sure, but if you just keep it that simple, you'll probably do pretty well. And that's all you need to do. Let's keep going.
So, I mean, there's always something to worry about.
Always something to worry about. How many times do we talk about that? There's always bad news in the world. There's always good news in the world. Yeah. The news follows stock prices. When stocks are down, the news will accentuate the bad news. But to me, I hear stocks are down going, great, better values.
Mm-hmm. Over 50 years of doing this, I think I'd be worried if there was, somebody didn't bring up something to worry about. That's the nature of the business.
I was joking because I'm a Reagan guy, and I was there. I started at Merrill in 1981, so I remember what happened. I remember my feelings in 1981, and I remember my feelings, how I felt by 1985. Ugly. And you had a tailwind. I had a tailwind because of what we did. We're not going to do that again. We're not going to cut taxes. We're not going to stimulate the private sector. We're kind of headed the other way. Did you have a tailwind? Will we ever have a tailwind again?
Valuations were the tailwind he had.
Well, we've had 13 recessions since World War II, and we've had 13 recoveries. Maybe we're going to have one. If this is a recession, it's probably the most predicted one ever. I never know when we're going to go. I'd love to know the future. I think it would help. I'd be a better investor. I'd pay $5 extra for next year's Wall Street Journal. It would really help. Right. I cannot predict the future. But this recession is so expected, so predicted.
Yeah, he's right.
Maybe it's coming. I don't know.
He's right. This recession is so predicted. It's like maybe it's not coming. Who knows? Listen, guys, this was not one of those angry ones, but it was one of those, if you go listen to the top investors, they all sound the same. Yep. They all, Warren Buffett and Charlie Munger say you should be able to value a company with one sheet of paper. That's it. And all these financial models. I mean, look at real estate deals. We always joke about real estate deals. I literally do it on one Excel sheet. One Excel sheet. I just do it. One sheet of paper, boom, 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 boom. And then I get other people sending me Excel sheets, and they're like 20 sheets. And I'm like, what is this? Well, this one involves it. No.
You got to sound smart.
No. And you know why they do it? Well, look at all my research. I did it. If the deal didn't work out, it's not my fault. And if the deal does work out, look, see, listen, keep it simple, stupid. The problem is the average mutual fund has 80% or whatever turnover a year. That means 80% of their companies get bought and sold every year. You can't tell me you're a long-term investor if you do that. Our goal, if you've seen the channel change in the last 2 years, I've gone from let me find a certain situation that's undervalued to let me find great companies that I can buy at a reasonable price. I have switched my mantra. Why? Because I'm lazy. I don't want to sit there and go in and out of companies. Will I still do it? Yes, there are still companies I'll buy where I'll go, you know what? I think this is drastically mispriced and I don't need to own it long run. I'm okay buying it, seeing it go up and selling at a certain point. But far more I'm becoming like this. Find good companies at good prices. That's it. That's all I'm trying to do. That's all we're trying to do on this channel. That makes sense to you? Subscribe and send it to some idiot friend of yours who doesn't get that, because they'll probably argue with you, but at some point when the bear market's over, they'll say, I've given up on stocks. He's reminding them, hey, remember that short guy on Everything Money? He seemed to talk about this way. Why don't we go listen to him again? Thanks very much for your time, guys.